So folks who are tuned in now, we're going to make an attempt to live stream this on YouTube. So we shall see. Looks like that's working. Very good. Excellent. And now I need to. Folks who are tuned in now, we're going to make an attempt to live stream this on YouTube. I guess I need to mute that on YouTube there. Lesson 1 is learned. All right. So with that, let me welcome everybody. My name is Karl Palachuk, and we're joined today by Rayanne Buchianico and Rich Freeman. Rayanne is well known as an instructor, a managed service provider. She's an accountant, an enrolled agent, and one of the true community leaders and a true pro on dealing with the PPP in small business, especially with IT companies, which is what she focuses on. Rich is the executive editor of ChannelPro Network, and he's been following the PPP story for, I guess, almost a year now, since day one. And so he's going to join me and kind of help me be a panelist. But Rayanne is all of the brains in this outfit, as Rich and I have both agreed beforehand. So with that, Rayanne, why don't you give us a quick intro to what you're up to, and then intro to what's going on with PPP.
Thanks, Karl. Hey, Karl. Hey, Rich. How are you? Good to see you both. And thanks to everybody for joining this little webinar that Karl and Rich helped put together. My name's Rayanne Buchianico. I'm the owner of ABC Solutions. We are an accounting firm in Clearwater, Florida, and we really focus our efforts on the IT community, helping MSPs understand their financials and manage their accounting and taxes and compliance. And so I'm here to just, help everybody understand the updates to the PPP loan and the $900 billion stimulus package that was passed into law on December 27th.
Cool. Rich, why don't you give us a quick intro to what you're all about?
Sure thing. Yeah, I'm Rich Freeman, executive editor of the ChannelPro Network. We are a publication 100% dedicated to the SMB channel. So VARs and MSPs in North America serving SMBs in business since early in 2007 and still going strong.
Very cool. Well, and I know Rayanne and I both have appeared at ChannelPro events. I hope you get back on the road very, very soon.
We are looking forward to it. Yep. We've got actually a pretty ambitious event schedule coming up this year.
All right. So I think everybody has some idea of what PPP is, but Rayanne, why don't you give us the quick rewind of 2020 and then what's going on in 2021?
Sure. So I already see one question from Brian Weiss on the Q&A window. So I really, really want to encourage people to type your questions into the Q&A window so that we can address them here for you during this hour. And Brian, there is a nice, easy report for you to get out of QuickBooks Online, and I'll tell you how to do that in a minute. Anyway, so when we were talking about this webinar, I'm thinking, how can I take this massive bill and organize it into something simple, to talk about? So what I thought I would do is start with, well, like you said, Karl, I'll start with what the PPP loan was and then move into what changes to the first PPP loan were made on December 27th. How this will affect your income taxes for 2020. Then I'm going to jump into the second draw, is what they're calling it, of the PPP loan, and let you know what you need to do, if to find out, one, if you qualify, and two, if you do qualify, how you need to do it. So, interrupt me with questions anytime, both of you guys, please, and jump right into the conversation. But so, quick summary background, on March 27th, the 27th of the month seems to be a very popular day of the month to pass legislation. So on March 27th of 2020, the initial CARES Act was passed, which gave which gave birth to the Paycheck Protection Program, which it's allowed small businesses to obtain loans from their lenders, from their banks, that would be potentially forgivable, so that you could use that money to keep your people employed during the pandemic. And then on June 5th, that was changed. We had a small window of 8 weeks in which to spend that money in the first round. Then on June 5th, that small window of 8 weeks was expanded to 24 weeks, so that you had a lot more time to spend all of that money on payroll expenses and other operating expenses. And then the forgiveness started to come out. And so some banks really, really dragged their feet with the forgiveness portals. And it turns out that was a good thing. As much as it angered the rest of us, they kept changing the rules. And I think the banks just, played it very conservatively and, did not really push this forgiveness portal, in the beginning, waiting for Congress to do something. Well, that something happened on December 27th. Finally, Congress got together a couple of days after Christmas. Well, a couple of days before Christmas. It was a couple of days after Christmas the president finally signed it, which turned it into law, right? So that's where I want to focus our next efforts, is what changes came about on December 27th. All right.
Quick question on taxes.
Sure.
I know that you plan to talk about this, but I just want to make sure, and if you want to do it later, that's a totally legit answer, but do I have to worry about forgiveness? If I didn't get forgiveness in 2020, but I took a loan in 2020, how does it affect my taxes in 2020 or 2021?
The correct answer to that question is neither year.
Okay,
This
good to know.
will affect your taxes in either year. So one of the main things that they changed. So the initial PPP loan, while the loan proceeds itself were never supposed to be taxable, and the IRS agreed that the loan proceeds would not be taxable. But then the IRS came out around May and said, but I want you guys to understand, you're not going to be able to deduct those expenses. If you pay expenses, with forgiven funds, you're not going to be able to deduct them. Well,
so I just want to be clear. So that means what they were saying at that moment was, if I pay somebody for payroll, because that's the piece that's going to be forgiven,
right,
that payroll was not deductible, or at least that was the message at that time.
Exactly. That was exactly the message. And so the AICPA and everybody started screaming. And, the IRS, even though in the spirit of the law or of the plan, that's not what Congress had intended, but the IRS does not interpret spirits, the IRS interprets law. So they said, well, this was a very bad precedent. No, we cannot allow these deductions. And so it took literally an act of Congress to reverse that decision. And that's exactly what happened. So the payroll expenses, the operating expenses, the utilities, and all of those things that you used with that PPP money will indeed be deductible, that even though you will get or anticipate receiving full forgiveness of that loan. And that's, I think, the important thing here is it does not matter whether you actually have forgiveness in 2020 or 2021 or never. Those expenses will always be deductible.
Thank you.
So the other thing that happened was the original PPP loan. Now, there's plenty of people out there that as soon as it came out, they went running to their bank and they applied for this loan. There are plenty more companies out there that never applied. So if you are one of those companies that never received the original PPP loan, they are reopening the original PPP loan program so that if you're a first-time PPP borrower, you only need to adhere to the original PPP regulations and rules, right? So that means you are entitled to your very first PPP loan as long as you're a small business, you have under 500 employees. You don't need to show a reduction in revenue in order to qualify. You just need to apply for this loan. So that's one of the things. They are reopening. And as a matter of fact, today is January 12th, the official opening of the official reopening, I should say, of the first PPP round started yesterday. And one thing that you should know, however, is that the SBA is doling this money out to small community banks. They have to have under $10 billion in assets to be qualified as a small community bank. They are not rolling it out to Bank of America, Chase's, for another couple of weeks. They want to make sure that the big banks don't suck up all of the money and hand it out to their friends. They want to make sure that this money gets into the hands of the smaller communities who really need it.
So I'm going to jump in real quickly there because we had a question from somebody in the audience that I think goes directly to that, and he wanted to know about quote unquote safe places to get a PPP loan. Some large banks are behind on this. Are you better off with a small bank? It sounds like small banks are pretty much the only way to go.
Small banks are the best way to go right now. Yes, the money will eventually find its way to the larger banks, but they are really, really trying to target the smaller businesses, and they want to make sure that the smaller banks who serve those, the community banks, the credit unions, the small banks that really serve those small businesses get first dibs this time around.
And I just want to encourage folks to put the questions into the Q&A, not the chat. Just that way we can just focus on the Q&A for that. Thank you.
Okay. So still with the changes to the PPP loan as amended by the Economic Aid Act. So you might hear me call it the Economic Aid Act. So new borrowers for the original PPP loan can use either 2019 payroll or 2020 payroll for calculating their maximum loan amount. That means you might have, if you were in business in 2019 and in business for 2020, run your payroll reports and determine your maximum loan amount. Now, what is your maximum loan? Take your annual payroll, divide it by 12, multiply it by 2.5 if you are an IT professional, or because if you are in the food industry, hospitality, or accommodations, that multiplier is 3.5. But for every other small business whose numbers do not start with 72, the NAICS numbers do not start with 72. Everybody else, the rest of us, we are at 2.5, 2.5 times average monthly payroll. Take full amount for the year of payroll, divided by 12, multiply it by 2.5. That's your monthly or maximum loan amount. Do that for 2019 and for 2020, and you get to borrow the higher amount. There's simplified forgiveness for loans of $150,000 or less. Back in July, the SBA released Form 3508S, which was a simplified form for anybody who had a loan of $50,000 or less. You just had to fill out this one piece of paper. They expanded that to $150,000. So now if you've had a loan of $150,000 or less, all you have to do is fill out that one piece of paper, but it's actually a brand new form that is I think it just came out, and it's not a 3508, it's like a 2974 or something like that. I actually have it downloaded, and I will put it on my website later today, abcsolutionsfl.com/resources. You'll find it there, along with a lot of this information. And so those new forgiveness applications, oh, right, they're due out by January 20th from the SBA. So if it's not already out, they are due out here in the next few days. So those are my changes to the first PPP loan. And then I want to move on into taxability. But first, I want to take a couple of questions, if there are any.
I'm not, oh, wait, somebody just popped one up there. So I will answer live. Stephanie says, can you please ask to repeat how we calculate our loan amount?
Okay, run your well, actually, don't even do it from your P&L, because you may split out your payroll into different accounts. Do yourself a favor, run a payroll report from your accounting system for all of 2020, and get your total gross wages, right? Well, actually, there's even more to it. It's total gross wages plus employer paid portions of health insurance, employer paid portions of retirement plans, and employer paid payroll taxes that are not FICA. So that means federal unemployment and state unemployment, state disability. The employer portion of it does not include FICA. So gross salaries, employer portion of health insurance, employer portion of retirement plans, and state and local unemployment taxes. Add those together for the year, divide it by 12, multiply it by 2.5, and that is your maximum loan amount. And you can do the same thing for 2019 and take the higher amount.
All right.
I hope that helps.
So, and one thing is that if, for example, like for me, my payroll was big enough that I didn't worry about all the other little details. You know what I mean? Once I had enough spending to have the loan, to meet the loan amount, I didn't include all the little other stuff because I don't need to, right?
Right.
In the calculation.
You mean in the calculation for the loan itself or for the forgiveness?
Well, in requesting the loan, I just looked at like, this is my payroll. So, I got somebody at $20 an hour and 40 hours a week and, click, click, click. I didn't try to get all of the little details because I just needed a chunk of money.
Right. And that's perfectly acceptable. If you don't want to go through all of those little details, you could easily qualify for the loan with just the gross salaries, and I don't think any bank is going to complain that you have not asked to borrow enough. So, and that just leaves a couple of bucks on the table for the next guy. So, all right. What does this all mean?
Can I come in with one more question here? Because there's one more in the chat, and before we forget about it. And so I will read the question here. It says, I'm Latino, I own an MSP. I heard that minority-owned businesses were to be offered early access to the PPP second draw. I currently bank with Chase. I received a first PPP loan. Who should I apply with?
So if you go to the, and that is a fabulous question because, it's really interesting for the Congress to think that minority-owned business owners would not use the big banks in order to do their banking. So, but if you go to SBA.gov, and you can find there a list of the community banks that are getting priority placement for the second draw on those loans. So I would recommend, checking out some of those, and there's going to be a lot of independent lenders out there. You may need to either open an account with them, or you might even need to have had an account with them. But, check with their regulations because each bank is going to handle it a little bit differently.
And at least last year, Chase and some of the other banks said, hey, if you're not a customer with us for 6 months, we're not going to process your application. So I don't know what smaller banks are going to do this year.
Right. And I'm actually seeing that already from many of the banks, for the second draw, and this time around, the cutoff date seems to be, you need to have had a business relationship with us on December 1st, 2020 or earlier. So they're at least, giving some hope to the people that switched banks because their previous bank, left them in the dust last time,
right.
which was me. I switched banks. I just didn't feel like the bank I was with, provided the services. So
right. Okay. So next question. So Darlene asks, so is the second PPP only for those folks who did not get it the first time around?
That is not true. No, PPP is there. There's a second draw for people who did receive the first loan, but there are some regulations and some requirements that you must meet. And I'm going to get into that in just a few minutes.
Very good. Rich, you want to just rotate on these questions?
Yeah, sure. Because actually the next question is one that I sort of had myself about EIDL. So I mean, does anything that was passed recently by Congress affect EIDL? That the specific question from Lynette was, will you discuss the EIDL loan at all today? Can we get the second draw on this loan and the grant associated with it? Also, is this EIDL loan forgivable?
All great questions. Okay, so there is no second draw on the EIDL. The Economic Injury Disaster Loan is it's a loan from the SBA, and they offer this loan every time there is a disaster, right? Whether it's a hurricane or tornadoes or floods or a pandemic, this is what the SBA does. So there is no second draw on the EIDL, and there's little to zero hope that it would ever be forgivable. It's a 30-year loan, so it's the equivalent of taking out a mortgage on your business. It's a 30-year loan. The interest rate is 3.75, and it will have to be repaid. Oh, and Lynette, I will get to the grant in just a minute. It's on my list. It's actually really close on my list of things I want to talk about.
So Jay has a clarification for the second round. Is it straight wages, or can benefits such as health insurance be included in the calculation?
Absolutely. All payroll related costs as originally defined will be included in the second round.
Okay. And then a quick note to Peggy. Yes, this is being recorded. We will post a link to everybody who was registered beforehand so that you know how to get to it. It's also going to be on my YouTube channel if everything goes well. I think that's it for the questions for now.
Okay, those are all super questions. So thank you for those. Okay, taxability. Are we ready to move into taxability?
My favorite subject.
Yes, income taxes. Isn't that everybody's favorite subject? I know it's one of mine. Really, I must get a life. Okay, so we've already talked about the expenses paid with the PPP funds are fully deductible in the year in which they were paid. That means if you paid your people the payroll in 2020, you must take the deductions in 2020. You cannot roll them over simply because you didn't get the forgiveness. So they are deductible, fully deductible in the year that they were paid. Loan forgiveness for the first time ever is non-taxable income. And this was a question of mine. It's probably not a burning question on the minds of anybody else here, but I was wondering, what do we do with this? We have to, we've got to put it onto the P&L as other income. I get it. And then it becomes non-taxable income on the tax return. I get that. Okay, but what do we do about basis, right? Because as corporations all have what's called basis. And so Congress even clarified that this will be an increase in basis, so it is truly for the first time ever in your life, free money from the government, right? So, so this is your one and only free lunch. So the loan forgiveness, not taxable, results in an increase of basis. The $10,000 advances, or it was a maximum of $10,000. It really turned into like $1,000 per employee. The EIDL advance, which was a grant, well, it really was indeed a grant and is also not taxable. So, so the $10,000 or maximum $10,000 EIDL advances are not taxable income. And you may have also received some of those grants from your states or local governments, also not taxable, right? So if you did receive one of those local grants, then again, you don't have to pay tax on that. And I'm looking at my notes. I want to make sure there's one more thing that I really wanted to point out. So section 333, yes, Rich, I actually read this. I didn't read all 5,500 pages. I swear to you, I did not. But I'm serious. It was like 5,590 some pages. But on page 2193, there was.
Let me write this down, 2193.
Page 2193, section 333. It indicates that that these loans and grants are not taxable. But it also says one more thing that's very interesting. Originally, in the original CARES Act that Congress passed in March, the object was to get a PPP loan or an EIDL, right? So, but people started applying for both. So they got both the grant and the PPP loan. And in the original CARES Act, and I want to say it was section 1106, don't ask me why I remember some of this stuff, but the Congress had said at the very beginning, if you receive both the EIDL advance and the PPP loan, then your PPP forgiveness will be reduced by the amount of your EIDL advance, right? So if you had a $100,000 loan and you got a $10,000 advance, your maximum PPP forgiveness would have been $90,000, and you would have to pay the $10,000 back at the 1% interest over the next 5 years. Congress overturned that too. So full and complete 100% PPP loan forgiveness, regardless of whether or not you got the EIDL advance, and you get to keep the EIDL advance without having to pay tax on any of them. So don't say your congressman's never done anything for you.
All right. So just a comment, I guess, really from Howard, that the CARES PPP really should be named the Full Employment Act for CPAs. So
Thanks,
I think
Howard.
all of the tax codes should simply be called the Rayanne Buchianico Full Employment Act. So.
All right. So one question I had emailed to me was, what about the states? Because we've got a lot of, every state has their own income tax laws. And so while none of the states have stepped up and said that they are going to follow the IRS guidance on this, there's like 3 or 4 different kinds of states here in the United States. We have 21 states and the District of Columbia, and they are what's called rolling conformity states. Whenever the IRS changes its mind, the state changes its mind right along with it and will follow the IRS guidelines. And so there are 21 states out there that do that. However, I should point out that the rolling conformity states is when the Internal Revenue Code is updated, the states conform with it. And this act does not change the Internal Revenue Code. So the states still have the opportunity of not allowing the PPP expenses to be deductible on your tax return, which would mean large adjustments between federal and your state return to get to your state income tax return for the year 2020. I doubt that that's going to happen, but you should be aware that it's a possibility. There are 19 states that are called what's called static conformity states. And that means that they choose a date in time to which to conform with the Internal Revenue Code. And they have to have a vote in order to change their conformity date. So here's a map of the United States, okay? So the rolling conformity date states, they are in blue. And those are the ones that when the IRS changes its mind, the state changes its mind as well. The yellow states are the static conformity. That means that they have a specific date in which they conform to the Internal Revenue Code. I want to say that California was somewhere in 2015, and I want to say, Wisconsin, 2015 for California, Wisconsin, I think was 2017. Anyway, so there's a list of conformity dates somewhere out there. And this is from taxfoundation.org. So you might even be able to find the information on their website. We have 4 states that, have made up their own tax laws and don't really conform with the Internal Revenue Service at all. So it's Arizona, Mississippi, New Jersey, and Pennsylvania. And then, but Pennsylvania and Massachusetts, those are 2 special states, so they have, they conform in one type of tax, whether it's the corporate tax or the individual tax, and they don't conform in another. So, find out, where you live. The ones in gray have no income tax at all, right? Florida has no personal income tax, but it does have a corporate income tax, and that's why it's yellow and not gray. So, just wanted to kind of put that out there, that it is not guaranteed that your states will conform. We anticipate that they probably will, because nobody, wants to put their people in that kind of predicament. I'm sorry. Did I say Arizona? I meant to say Arkansas. Thank you, Stephanie. Sorry. Okay. Second round, the second draw, PPP rules. So we have, if you have taken the first loan, you can apply for the second loan. However, all right, before I move on to the second round, Randy's asking if I can explain what tax conformity is again. Right, so each state decides whether or not they want to adopt the IRS regulations as their own taxing regulations. In most states, when you go to file your state income tax return, one of the first lines it asks is, what's your federal adjusted gross income, right? So you start there, and then you make your state adjustments accordingly, and because there are some things that are taxable at the federal level, not taxable at the state level, vice versa. And so you start with the federal adjusted gross income, and you kind of work your way down, right? So the states have, decide exactly when they want to conform to IRS regulations there, or the Internal Revenue Code. Okay, okay, off we go. Second draw PPP rules. The last day to apply is March 31st. So don't drag your feet. If you want to get in on the second round, you have until March 31st to fill out the application. The same terms as the original PPP loan apply. There's no collateral, there's no personal guarantee. It's a 5-year loan at 1% interest. Now, there's a couple of things that you need to know in order to qualify. First of all, you have to be a small business with fewer than 300 employees, as opposed to the original loan of 500 employees. So they're really starting to go for the smaller businesses. You must have had a revenue reduction of 25% or greater reduction in 2020 relative to 2019. And so here's what you do. You run your P&L for 2020 and then hit the comparative box, and say previous year. Yeah. And there's also, at least in QuickBooks, and I'm sure that it also happens in many other accounting systems, but there's also a box to show you the percentage of change between the 2 years. Nice and simple, right? So you run your 2020 P&L, comparative to 2019 with the percentage of change. And if that number is 25% change, great, or larger, meaning that your 2019 income was higher than your 2020 income, then you may qualify for this loan. However, if that income is still less than, or if that change is less than 25%, what you can do is you can do it on a quarterly basis, right? So run it for last quarter of 2020, and the previous year with the percentage of change, and do that for every quarter of the year, and see if any one of those quarters dips below 25%.
I want to just kind of go over that a little more slowly, right?
Sorry.
So, no, it's all good. I just want to make sure that I heard what I heard. So right. I can either show that my revenue for the year was less, it was down 25%.
Correct.
Or if I have just one quarter, like, to be honest, if I had one really good quarter in 2019 and that became an average quarter in 2020, my 2020 quarter, that one quarter might be down 25% from 2019.
Correct.
And so I would somehow have to prove that by the quarter.
Absolutely, right? So I was reading the instructions on the loan application, and you have to identify on the loan application which quarter resulted in a reduction of 25% or greater. And then you will also have to provide that information to your bank, either at the application stage or at the forgiveness stage. But either way, you have to show that that there was that reduction. And don't think that you can just get away with moving revenue from one quarter to the next in order to make this happen, because you have to be able to provide copies of your income tax returns, so that at the forgiveness stage, showing that these things, really did happen.
All righty.
There's a question, is this second PPP process the same forgiveness as the first? This is not a loan, correct? That is correct. It's also forgivable money. And, and again, they want to make sure that this money gets into the hands of the people that really, really need it. And they have a name for it. The economic aid to hard-hit small businesses. So otherwise known as the Economic Aid Act. That's the official name of the act. So they really, they recognized that the original PPP was a mad grab for cash. And what they're trying to do is make sure that the people that really need it, are the ones that get it. So again, the maximum calculation, or the maximum loan, is going to be 2.5 times your average monthly payroll, just like in the first loan. So take your 2020 payroll and divide it by 12, payroll and include an additional cost, divide it by 12, multiply it by 2.5, and that's going to be your loan amount. And again, you can do this using 2020 salaries or 2019 salaries, to get maximum loan. Another thing that happened, which was really interesting, is in the original PPP loan, in the original CARES Act, any company who borrowed money under the Paycheck Protection Program was not allowed to take the employer retention credits. And the employer retention credits, what it is a direct, let me see if I can explain this easily, is a direct reduction in payroll taxes for the employer. And it's a credit. It's filled, you fill out form 7200 and you take the credit on your quarterly 941, your quarterly payroll tax returns. And so you will get a credit of the FICA, against FICA, which is Social Security and Medicare, dollar for dollar, up to $10,000. The original one was $10,000 per calendar year. This most recent stimulus program increases that to $10,000 per calendar quarter for a company. And so, and you are eligible to take it if you have the PPP loan. However, you cannot double dip. So you can't use PPP money to pay payroll and then take a credit against that payroll in order to get a refundable credit from the IRS. So you can't double dip, but you can have both now. So as long as you can, adequately separate, what was spent with PPP money versus, what you're taking the employer retention credits against, you should be fine. Last piece that I have, because I know we're running long. So operating expenses have been updated to include cloud computing expenses. So they are now included in covered operational expenditures eligible for PPP loan forgiveness. You still need to spend at least 60% of your PPP loan on payroll taxes, and other employee benefits. And the remaining 40% can be used for operational expenses, which now includes cloud computing, and software as a service, and all of the things you MSPs out there are selling to your customers. So,
wow. All right.
Wow, that was like a total mouthful. Right.
All right, my brain's full. So luckily this is being recorded and you can play it back at half.
Really slowly.
Cool. So Alan has a question. 2020 loan is sitting in and this may be more technical than we want to get into, but it's sitting in a liability account. Mm-hmm. The loan is forgiven. What's the journal entry to move it from the liability account?
Debit the loan liability account, credit other income. And you also want to create, when you create that other income, here's what I've been calling it, PPP loan proceeds hyphen non-taxable. You want to make that very clear that you are not to pay tax on that money.
Question from Josh here. And he says, for those that would like another free lunch, since you must show a 25% year-over-year drop across similar quarters to qualify for PPP now, if you already got one, is there a legal workaround for those of us that made it through 2020 fine, but are feeling the fallout acutely now?
I cannot say that there's any, and while I hear exactly what you're saying, Josh, and I suspect that we're going to continue to feel the pinch of this pandemic for months to come. And economically, I don't even know how long. But anyway, as of right now, those are the rules, and I don't think there's any real way around it. If you don't have a quarter in 2020 that dipped below 25% below 2019, I don't know that there's any legal or legitimate way to get that loan right now.
And I just want to follow up on the part of his question where he said across similar quarters. I mean, my understanding was you don't have to compare Q2 to Q2 or Q1. If any one quarter in 2020 was down 25%.
Right. So it has to be of the comparable period, right? Because I don't think that they want seasonal employers, that work during the summer and don't work in the winter to have their fourth quarter, measured against their second quarter when it's not really comparable income. So it has to be the same period in both years.
So it is Q1 to Q1, Q2 to Q2.
It is, but let me just throw this one last piece at you, because I scoured looking for this. I keep seeing quarter. I've seen the word calendar quarter a couple of times, but they never clarify whether whether the comparison are fiscal quarter, calendar quarter, or any 3 consecutive months. So I don't really know the answer to that, and I suspect that it's one of those questions Congress didn't think to address in their 5,500 pages.
One final note to Josh, and that is that there has been some idle chat, at least, that there probably going to be another round. So at some point, they're going to look and say, well, let's say that this all goes through whatever the first 6 months of 2021. Then they'll probably figure out a way to address people who are feeling pain this year that somehow survived last year. So that's, of course, just wild speculation at this point. Greg has a question. What's the deadline for applying for forgiveness for round 1 loan?
March 31st. Everything's been extended to March 31st, with the exception of the employer retention credits, and they've been extended through June 30th of 2021.
So if I've been ignoring this for a year, it's now time for me to go fill out that paperwork.
Yes, do it now before all of the money is gone.
Exactly.
When comparing quarters, do they look at gross profit or net profit? Neither. They look at gross revenue. And and I want to make sure that everybody understands this, that your gross revenue does not include your PPP forgiveness. So make sure that you get that PPP forgiveness portion and the income all the way down at the bottom of the P&L. So your gross revenue is going to be revenue from sales, commissions, sales of products, services, and I venture to say even investment income, is included in gross revenues. So, but you should not include your forgiveness in that.
Very good. All right, thank you. So Randy says, I thought I heard for loans under 150,000, first round was automatically forgiven?
It's not automatic. You do have to fill out a form, but it's pretty much guaranteed that it will be fully forgiven. But you do have to fill out a form because there's a bunch of questions in there. They want you to attest to that you've spent the money properly, that you're not a convicted felon, and all of those other things that you have to attest to. And so they want your signature on that piece of paper before they will forgive the loan.
So it will be forgiven. You just got to fill out the paperwork.
Right.
Cool. All right. Is that it for the slides?
That is. Yeah. I really wanted it to be a conversation for the three of us. I didn't want it to turn into like a PowerPoint thing.
No, that's totally cool. So, all right. So if you stop sharing, then it will be.
Sorry. Yeah. We can all come back onto the screen. So, yeah. Sorry. Hey.
That way people can see my look of surprise when you say something like, what the? So cool. Any other questions from anybody? Rayanne, thank you so very much.
You're very welcome. Thanks for putting this together, Karl. I really appreciate it. Rich, thank you as always for joining in and, and adding your thoughts. So.
Well, you should get somewhere along the line an award from somebody for all the work you've done in the PPP that has just been like free to the community, and we just need you to know that we love you. So.
Well, I love you guys too. So, you're all right.
Any questions, Rich?
I could probably ask a bunch. We're probably out of time, but I will just here. How about this? Reiterate again, Rayanne, where people can get the write-up on all this, the ABC Solutions FL.
Oh, yeah. So, and I'm going to be putting more of that stuff up on my website today. I've been gathering a bunch of information, but you can go to abcsolutionsfl.com, abcsolutionsfl.com /resources. And that's where you're going to find a bunch of information from the first round of PPP loan, the second round of PPP loan, and any other documents I feel like throwing up there. So
I did put that in the chat, so
thank you.
Be able to see it. So
okay.
I don't see a timestamp, but it was a few chats ago, but it's in the chat now.
And I see Brian's question. So no love for someone who made the same gross revenue but had more expenses due to COVID. No, unfortunately not. But I did hear some grumblings about that. Something about wanting to allow some COVID-related expenses to be. I'm not sure. I don't want to say it because I don't have it in front of me.
Yeah, some of these things like the plexiglass dividers and so forth, those are $60 to $100 a piece. So if you had to buy a bunch of those, you could have some serious expenses, and plus lots of other stuff where you just had to change your standard operating procedures. That affects your profit. Certainly doesn't necessarily affect your revenue.
Right. Yeah, it definitely does that. And who knows? Maybe I'll do another webinar on how to adjust your MSP pricing strategies for COVID-19 expenses to recover. So, I don't know. It sounds like there's at least a blog post, that could come out of that.
Yeah, Josh says perhaps they'll address the profitability rather than the revenue.
I doubt it. But it's a nice thought.
Okay. Stephanie says, I did hear that if you made 150,000 or less, you do not have to prove the 25% reduction. But if the amount is above 150,000, you need to show paperwork to prove it.
That might be true, Stephanie. I vaguely remember coming across that over the weekend, and I don't think that I touched on that subject. Stephen Faulkner says that his last dental visit had a surcharge, a PPP item surcharge. Yeah, I know. I have a dental client, and he does the same thing. And why shouldn't MSPs do that, right? Especially if you have to go on site, and you've got to protect your people with all of, not to mention, keeping yourself, clean and sanitized, and protecting the people that are going there, making sure that they have gloves so that they're not spreading germs onto keyboards and all of that other stuff. Yeah, I mean, I would absolutely start consider charging an on-site surcharge, but that's me.
Right. Well, my favorite example of surcharges is always the phone company, right? There's a $4 for this and $5 for that, and we're still paying a surcharge for portability, which, didn't get implemented for the first 12 years. They charged us every month for portability. So whatever. So yeah, I encourage everybody to raise your rates and add a surcharge for PPP. So, okay. Any other questions from the panel or the crowd here?
So I just wanted to say thank you to everybody for taking time out of your day to come and listen to the three of us talk. I really do appreciate it, and I'm just glad to add value to the community, because you guys
Well,
just
you certainly
add so
do.
much value.
So yes, lots of notes of thank you coming in. We had about 50 people online, so plus the folks on YouTube. So very good. So we will get a recording up as quick as we can. If you registered for this webinar, you'll get an email. And, of course, Rich will have news and commentary on ChannelPro, and we'll make sure everybody has a good link to Rayanne's website and resources and so forth. A quick reminder, I have a State of the Nation address tomorrow, so with luck, we'll see you all there. If you're not signed up for that, send me an email and we'll hook you up. All righty. With that, thank you all. I appreciate you being here, and we shall